And we back once again. I want to do a quick video on sort of my preparation methods for the next day using unusual whales and a combination of gamma exposure charts and just kind of ways I think about the market. I do this probably every day a little bit, and then I really do a weekly planning session that's pretty in depth, but and then every month I'll do a really in-depth monthly one and then a quarterly one, and so they kind of all tie together. But as of right now, we're just kind of playing the day by day, at least within the overall weekly theme, and going all the way to a quarterly theme. So just kind of keeping it all in sync if possible. Going through. I was very very bullish coming into today, and we did not have a very bullish day, as you can see. I was expecting this breakout here. I was expecting us to go higher into the Biden speech, just for because I figured the low is probably pretty close. A lot of other reasons, just my general feeling was that we were done going down for a little while. But anyways, I might just be a little early with that. So we'll take a look here and see. But what I'm trying to look at here is this is one of my favorite charts with unusual whales, is these cumulative premiums. And nothing real fancy here. All it's doing is showing you over, since February 28th, the cumulative premium. So this is basically the net bull versus bear premium. If that's someone's going short a put, that would be bullish, so that would count as bullish premium. And if you're essentially either short a call or long a put, that would be considered bearish premium, just by this, by the way this unusual whales bot categorizes it. So I don't know how accurate it is, but I take it for face value and see if it gives me any kind of edge or interpretation on what I think is going to happen next. So I really like watching the bullish bearish flow on puts and calls, and trying to keep track of that. I think if you kind of aggregate it, put it all together, it'll give you a really good idea of what's going to happen next. So what we see here, just looking at this chart here, is that the 405 net premium went up. So just using basic technical analysis here, you can just see that it obviously made a new move higher, and it has been steadily increasing on these 405s. So that would coincide with futures being at around 40.50, something like that, 40.40, 40.60. I don't really know. It's discounted a little bit because SPY. But next, you see another move higher on the 390. So if you were bearish coming into the close today, I wouldn't want to see premiums, net bull premium, go up. So that just means that there was a net bullish sentiment on the 390s, meaning that there was probably more short puts, there was more call buying on those, in the monies. Same thing on the 405. So they really spiked those 405s up. That would tell me, at least in the short term, probably going to see a move towards that 405. That's just what I'm looking at right now. We'll see if the other evidence coincides with that. And then you can go on down the line here. So, but I'm just kind of looking for anything that just tells me some information. So that's kind of what I gather there. Coming down here, I like to look at this little chart. This is something I used to actually do myself. I used to create a little grid like this and do it and kind of look at all these levels here and kind of put it together myself. But they did that for you. They added that in there, so that was really nice. So it's a new little feature that's been there for about a month or so. And basically it's going to tell you the different premium levels. So these are going to be the different orders that come through in the market. You got 200,000, 30,000, 50,000, 5,000. And whether they're bullish or bearish, again, we're following this bullish bearish premium theme. And so we see that this is very net bearish at each level. However, if you look at this every day, you can start to get an idea of if the premium was a lot, like you would with watching a stock's volume. Hey, it was down on low volume, so that would be sort of like a potentially, some kind of bullish divergence, or same thing on the way up. So in my mind, it's a little too bearish on a little bit too little premium. It's just kind of what I'm seeing here. Once you start seeing these 59s on this side, you typically, if you want to see a continuation move, what I've noticed is seeing these being about this 52, 52, 51. You don't want to see it this bearish. typically, especially with the 200,000. You want to see, essentially, if you're like, I'm bearish, I want to see these 200,000s in the billions. You can see that total premiums here on the 5,000 plays were 1 billion. And the other day, all of these were billions. So we're starting to see a lightening up here. Even though premium was 59% bearish, it was only 350 million to 240 million, versus bearish premium of 1.1 to 900. So it's not a huge difference here. I would say that this is actually bullish to me, just because of the lightness on this 200. So this is something you just got to look at every day, and you start to get a sense of, oh, hey, that doesn't look very bad to me, or that looks really bad to me. Another thing I like is the cumulative premium across expiries, so expirations. So then you can start to see, okay, now we can try to gauge a timing for, okay, we're bullish 405s, essentially. Let's just kind of keep it easy. And essentially we're sort of like in maybe an oversold condition in my mind, according to this, flow levels here. So we're bullish 405s, we're oversold. And then we saw a little bit of a leg up here into the 520. The 520 expiration, which has been very bearish. This is just the next upcoming like monthly OPEX type of thing, which is always just an event for everybody. So you got net bearish. I mean, it's still technically in a downtrend, right? But you hit a low and then you're kind of going sideways here. So that kind of, you got the bullish 405, you got the sideways action here on the 520, which is our next expiry, which is really the most important right now. Because, if you're a day trader, you really only care about the next big expirations. You don't need to be focusing too much on the longer, unless you're trying to, play longer swings and stuff. But we saw a drop off here on the 715s, which is interesting. So this is just something I'm going to keep an eye out on. The longer dated ones are dropping off a little bit, but you got the 630 that's staying pretty steady. So again, if you look at this every day, you start to see the trends start to develop. Next thing I look at, I don't care about all this stuff really. You're getting too deep in the weeds, but this is my favorite chart right here, the SPY Greek breakdown. And I always just come right here and go straight for the premium, because I really want to see this big level that we're going to be sort of around. I want to develop like a pivot level. Like, okay, if we get too far away from this level, we're likely going to be mean reverting back to it, unless they could develop a new one, a new big level. So this level right here is this 403. So that kind of coincides, you can see there's just a ton of premium here. That kind of coincides with that 405 level that we saw over here getting bullish. Okay, so in my mind, I'm going, okay, so they're bullish 405s, and then with the Greeks, our big pivot level here with just the premium is going to be sitting here at 403, because this is just the closest. You got the big spikes here, but you're talking, someone's putting money in the 450s and the 480s put premium. I don't really care about, there's no way we're getting there anytime soon, especially by 520. If we were there at 520, that'd be awesome, but I highly doubt it, especially if it's all put premium. But I really care about this one, because you can see that it's essentially like in between kind of this cluster here, but it's the big one. So 403s, and then I would be looking at the 415s. If we started to get really sketchy to the downside, now you're talking 350. So this gives you an idea of what is possible, and you're basically just trying to develop your own like probability distribution within whatever theories that you're coming up with. So I'm looking at this 403, I'm bullish 405, and I'm slightly bullish as of right now. I'm not that bearish, just because the premiums for 520, as we saw, were going sideways. So this is kind of just what I look at. I don't really concern myself with too much more than that, mainly because, then I'll look at this new stuff here. I like to look at this 5-day. It's basically an options volume profile. So seeing a profile shape like this, and then a close at the low, not that bullish to me yet. But however, again, we're seeing that 405 level. Look where it heads up. So they were bullish the 405s right in this fair value area, because it's you would say it's a fair value area. It might not be, just because there wasn't a lot of volume traded there. But they basically just said screw that area and came right to the 400, which obviously was a much bigger level. So coming back to the 405s, not and filling this area out and normalizing this distribution, not that out of the question, especially not a lot of volume traded here at the lows. So a lot of times you see at the tails of the volume profile, that's sort of where the reversal comes, just because the volume just dries up to the downside. So very possible that this is the low or close to it, even as bearish as today felt. And then you got this COPE indicator, which is really cool. What that is the cumulative options premium effect. And so it's measuring the stock's bid side versus ask side premium flow over a specific time interval, which would have been today. So you can sort of start seeing a trend with what the COPE is doing. I just basically look at it at the end of the day and see if there's a divergence or anything like that. Not much of a divergence here, so it doesn't really lend too much credence to the idea of a reversal to the upside here yet. You will see the divergence develop over sometimes, and it'll play out the next day as a reversal. So keeping an eye on that as well. So yeah, this is sort of what I look at there, and then I come over here and I'll look at the Gex charts here. A lot of people are doing this right now, so we'll just come in here and type in Gex SPY 40, and basically what it'll pull up is our next expiry, which would be 5/13. You can already see someone's looking at Apple here, kind of seeing what the gamma exposure looks like in a little bit of a deeper level. This changes throughout the day, so don't put too much stock into what it's saying right now. But here's SPY net gamma exposure for Friday. Okay, so this is going to be Friday. Your expected range, basically 398, 399 down to 387, 386. So this gives you an idea of what is possible right now. And my whole thinking when it comes to reading a gamma chart is all I want to know is, where's that big gamma level, and is it net or is it net short or is it net long? Right now we're net short, big 390 right there. So it's going to act as a magnet as long as it's below this vol trigger. That's my thinking. As long as we're inside the expected range and we're below the vol trigger, then I expect 390 to sort of be the level going into Friday, that we're kind of just like hovering around, and unless we really get a break to the downside. Now this will change throughout the day, and how we'll know what it looks like is we're going to be watching it. This right here updates every 15 minutes throughout the day, so you can see the changes over time. This is a huge upgrade to your trading, is if you can watch this develop over time. And I'll kind of go up here a little bit, because you can start to see the long gamma up here, the call Gex here. It starts to diminish as these are printing. You can start seeing it get a little bit smaller as price starts to move away from it. Basically what that is that gamma exposure, that Gex, is expiring, and it's causing the market to go down. So you're getting pulled towards this huge level. At the same time, you're getting basically the dealers, or everybody's getting out of their calls, and you're below the volatility trigger, which means the market makers are actually selling into weakness versus buying up weakness, which is what they do when it's prices above the vol trigger. So you got a situation where you had all that Gex expiring, causing the market to come down towards that big gamma level. And so it was just kind of like an inevitable thing. You can see it's starting to disappear completely. By the end of the day, it's all gone. And all that means is all that gamma exposure just expired. Worthless. All the calls expired worthless. I'm sure you felt that if you were in calls. Anyways, hopefully you like this type of video. If you do, make sure to like it and subscribe and tell all your friends. Also, put that notification bell on and leave a comment below on what kind of content you want to see, or if you like this kind of thing. That way I can keep pumping out the content that you guys want to see or hear or think about. So thanks a lot. Talk to you next time. Bye.